Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Friday, March the 15th. Markets up again. Dow up 83, now posting another all-time high, up 10 straight days in a row. S&P up 8, gold down $1, but had a nice recovery bounce, and I'm going to discuss this with you. Gold's looking interesting, as well as the dollar down 32 cents, Nasdaq up 12. So we're seeing the S&P now only about 13 points away from its all-time high, and that is going to get me even more bearish. And I have to say, having a bearish tone. Now, we're trend traders here at Trading Market Technicals. No question about it. We follow the trend, and we follow the intraday trend because we have limited time as you're trading. I'm not holding any long-term positions right now on those swing trading because I think the risk eventually is going to be to the downside, and all you need is that one bad comment, bad news coming out of Europe, and the markets will be down 20, 30 handles next morning, and I really don't want to deal with that. So that's how I gauge my risk, is saying, okay, we're at lofty levels. We're at all-time highs. Transport's made new all-time highs. You'll see it all on the charts. Dow Jones, uncharted territory, and to me, this is just a likely spot for the sellers to start stepping in. Now, do we get above 1575 in the S&P? Absolutely, we can. We can get to 1600, which is really not that far away if you really look at things. It's 2 days up. So I think that after options expiration has gone, and we did our analysis on Max Payne, and Max Payne supposedly is right again. We had either a slightly lower close to slightly up, and that's what the market has done. Actually, it has gone up every day this week. So putting a lot of puts expiring worthless, and putting advantage to the call riders. So nonetheless, we are moving higher, and I think as though this is a very impressive move higher. Now, this is just me just speaking, so please, this is not an actionable trade, but I think that as we continue to rise higher, I think a major reversal is around the corner, and I honestly do think that. And the reason why, and the Fed's going to play a key role here for the sell-off, is because the economic data right now has been solid for the last several weeks, and we all know that. We all know the economy's humming along, getting much better at a slower pace, but nonetheless getting better. Jobs are starting to come in line a little bit, and I really would question about the non-farm payroll jobs, but that's another issue. I do see the Fed really going to have a little bit of problem if interest rates really start to rise. I'll show you the chart here in a moment as well. But I think that what's going to happen, if you hear, and this is going to be the key now, if you hear the Fed start speaking hawkish here in the coming weeks, then I think that's going to put a scare to all of the longs that are actually been buying up at these areas and start to really take money off the table. Now, if that happens, I think also if the Fed starts talking hawkish here, that will eventually put an end to free money for the government. Now, I think we're a little bit ways out there, so we don't want to get too far ahead of ourselves. Just a couple of comments speaking hawkish is going to put pressure on the markets, at least in the short term. Okay, now, here's the other factor, the dollar, right? If the dollar has topped and is about to roll over, we could see some good selling pressure here. And if the dollar pushes below 79, we can have a real nice rally in precious metals and oil. So that's something that's going to be an interesting factor too. And if oil decides to push above 95 and start breaking 100, we talked about this the other day, that's going to hit the transportation sector, which is going to put pressure on equities. Throw in earnings season next month, seller may go away in another month, 2 months. That's going to make things really interesting going into the spring. So that's what I'm looking for. And we're already halfway done with March. April's around the corner, so I'm really looking forward to some really active trading. So I just wanted to put that out there for you guys. That's just my thought. It's not anything actionable. It's just what I'm thinking. I like to take things from the charts and put things in perspective, a little fundamental, a little bit of hindsight, so to speak, and really try to dissect things. Now, if things do start to play out what I'm talking about, then I'm going to make an actionable trade and start looking to short the market. As of right now, I'm looking for the best pullbacks. I'm looking to buy the market, buy stocks that I'm looking for that have these ridiculous runs, and if not, I'm looking to sell relative weakness to the market, maybe at earnings or downgrade to that. And then by doing that, you're obviously not as active, but that's fine because when the market does turn, I get extremely active, okay? And that's just something, just a little tip that I wanted to put out there. All right, what do we have for the economic calendar today? Industrial production, capacity utilization, and Michigan sentiment, all market movers, so keep an eye on that if you are coming in long for today, okay? So I'm going to just put out a couple of things here as far as indicators. We'll go right into it. Nothing really has changed. The copper is continuing to hover around the lower trend line of this large symmetrical trend line. Again, not what you like to see if you're a bull. If copper's moving higher, the market should be if the market's moving high, the copper should be leading, and it's not. So we do have a little bit of divergence here. Look at the ratio chart for the S&P. Obviously lower, weaker, so not really doing too well. New highs, new lows. We're getting back above these lofty levels. We did have a little spike lower, as you can see, and we had, let's call it a 2 or 3 day sell-off, and then we just kind of really rallied up higher again, and now we're getting back to these areas. So today will be interesting to see what happens today. We are down about $1.50 in the mini, so really no big deal, not much to discuss. Let's take a look at the treasuries, the U.S. 10-year, and we are hovering here. We've been flatlined for 3 days. Okay, which is good for the Fed, right? He doesn't want interest rates. Bernanke does not want interest rates to rise. It's going to squeeze him. So right now we're hovering here. If we break out of this area, I think you're going to see 2.25%, easy. And I think that's going to run real hard. And if that starts to happen, I think people are going to start unwinding some of their long positions. That's just one of the cards. The other one is going to be the dollar. And here's the dollar. The dollar looks like it's kind of pause for a little bit of a pullback here. Now, if the dollar does pull back, right, we should have equities possibly still stay bid. But once the dollar starts to pull back here and really starts to break down lower, that's going to really put some good bid into precious metals and oils like I discussed earlier. So watch this. It's kind of sticking around the upper end of the range here. It is quite overbought right now. Again, overbought is not a sell signal, but we do want to see where this thing takes us. If we start to break 79 right up in here in this lower area, I think we're going to have some interesting trade developments coming in the near future. So let's keep an eye on that. Let's take a look at our VIX. VIX is getting very interesting for a trade. Now, I want to see, basically what I like to see in the markets itself, I like to see the VIX give us one of these big red candles, break outside of the Bollinger Band here, and the S&P just gap up higher and then fail. And then that'll put a tradable top in the S&P and basically the general market, and then we can really start laying into some shorts for a couple of days for a swing trade. Until that happens, the trend is up. We need to respect the trend. Until price tells us otherwise, we need to continue to say the market is going higher and the market should be being bought on pullbacks. And that's really unfortunate. I mean, love to short the market here, but I can't do it. It's not in my cards, not in my trading plan. I'm a trend trader, so I'm looking for, again, pullbacks and/or relative weakness. You can't short a stock, even though the market's going higher, if there's a reason for it, a catalyst. Okay, take a look at now the CBOE. No fear at all, guys. Broke right back down again. So this market is relentless. We have a grinding market that's running higher, no volume. We have market that's actually divergent from our indicators in other different asset classes, which is not good. We have, of course, as you know, China and emerging markets selling off. Not good. Copper lower, not good. And then we have extreme complacency in the markets, which is a huge red flag. Buyers are not afraid to buy at these levels. When the market does turn, and believe me, it will. We don't know when, but when it does turn, a lot of these longs will be caught to the upside, and it's going to be a real scary feat for them because there's going to be one door, and there's going to be no bids. And when the algorithms kick in, you may even have that flash crash going like we did 2 years ago in May. So, again, I'm not predicting it. I'm just saying it can happen. So we have a lot of computer-driven trading here, and that's what happens when you have everybody running for the exits, and then you have the algorithms looking for bids to hit. It just makes things even worse. Okay, but anyway, just enough. I just wanted to kind of point that out to you. Let's run into the charts. I wanted to show you the GDX. Interesting development yesterday. The GDX and gold were down all day, and for some reason it just kind of popped up and recouped at least 50% of that candle. Now, that's what I want to see. This is actually making a right shoulder of this inverted head and shoulders. We have two parts to it, right? Left shoulder, head, and now we're making this right shoulder. If, in fact, we can start breaking out of here, then I think you're going to have something really decent here. I think we have a trade going. Right now, it's really just, if you're looking to get long GDX, you're basically looking to pick a bottom. Price has not confirmed anything yet. We need to really break above $38, $38.20 to really get excited about GDX. Now, if money starts rotating out of equities, that's going to be another ticket now, a whole different ball game. Now you're going to have a catalyst. If money starts rotating out of equities back into precious metals, I could see a major rally in oil and precious metals, and I do see it coming in the near future. So that's going to be interesting in the coming weeks. But right now, price isn't telling us anything other than forming some sort of a bullish setup. And we really need to really break above this level here, 38.20. I'm going to call it 38.20. We really need to get above this 38.20 to really get excited about it on a closing basis. Okay. Now we'll just take a look at our spiders. Now I put sideways consolidation channels here, and you'll see what happens. Repetitive patterns remains the same. We did a little bit of a better volume, but still, guys, again, we did break out of this channel now on the spiders, and take a look at the 60-minute. Okay, and now we are back above it. We did get a little bit of a gap up, and we have negative divergence again forming on the 60-minute charts. But now, how many times have I mentioned this to you in the last several months, couple of months actually? Negative divergence did not play out here did not play out, and now we're here again. So watch again. Maybe this time, since we're at the upper end of the range, maybe this will play out again. So we'll see what happens. We definitely have red flags in the picture here. Spider 30-minute chart again, guys. Inside day, we finally broke out of it on ever so slight price action, and now we're ticking to the upside here. Let's take a look at the daily charts of the S&P. Look at our CCI. Price breaks up, and we are going lower. Another divergence of our indicators. 1555 now is going to be support. We're looking at 1575 as our main target. And here's the transportation sector. Here's our leader. Broke out yesterday. If you remember on yesterday morning's video, transports already broke out and the other sectors did not, right? And look what happens. Transports break out, everything else follows. Transports is the main leader, guys. Transports, the IWMs, and the NASDAQ. Look at those three, and of course the Qs, throw Qs in there. But if you look at those three, they'll give you a better idea of what's happening. If you're looking to trade the market as a whole, you really want to see where the market's going, even if you're trading long stocks. Because 99% of all stocks will follow what the S&P is doing. So if you look at here, we have a move higher. Look at what we have in the Russell. We broke out of consolidation. Same thing. Again, on dismal volume, though. So this here is not telling me much of anything other than we're continuing to break out. We had 2-3 days of down movement and another 9-10 days of up movement. So no volatility again to be had. But again, that's going to change, and I feel real confident about that in the coming days and weeks. Here's the diamonds. Resilient, up 10 days in a row, uncharted territory, and diamonds continue to run higher. I think this is going to be a good short candidate as well as the transports eventually. Again, we need to time it. You need to have proper timing and price management here before you look to get short anything that's bullish like that. Apple, again, guys, just really doing absolutely nothing, hovering around here. I think it's setting up for another move. Now, obviously, the trend is lower. We can see that here. If Apple breaks the 420, remember, guys, you're going to see that whole round lot number, that 400. And if it breaks 400 on a closing basis, you're going to see 1352. No question about it. Qs really haven't done anything. We are still 9 days, 8 days in this sideways consolidation, looking for a breakout higher. So we'll just see. We'll see what happens today. I think you got about 2 hours of trading in the morning, and then that's it. Call it a day. It's options expiration. It wasn't like it used to be many years ago, where the markets were busy all day into the close and in after hours. 2 hours, 9:30 to about 11:30, and then really, if you got a little bit of money banked in, close computers and go out and play some golf. That's really my best advice for you today, because there is absolutely nothing going on until this market really starts to pick up in volatility. Trading is going to be very limited for at least the day traders for the intraday. Okay, have a great day, everybody. Enjoy the long weekend. I'll have a big report for you on Monday. Take care.